What makes this Friday special? Of course, the next US nonfarm payrolls report, which is usually causing strong volatility in global markets, and definitely gold will be closely watched given the heightened geopolitical risks in the Middle East. So this video will briefly explain my technical outlook on gold, and I will also take a look at pound pairs such as pound dollar and euro pound after headlines suggested that the Bank of England has probably started to think about more aggressive rate cuts, which could be negative for the British pound. So having a look first at gold, we can see that the precious metal has been somewhat stable lately following the peak at an all-time high of 2,670 a week ago, and I think that there's scope for more weakness in this market because if you look at the technical indicators, the RSI has already peaked in the overbought zone and is sloping downwards. Likewise, the MACD has slipped below its red signal line, so these signals are kind of discouraging for the market. However, we can't exclude any upside corrections because the stochastic oscillator seems to be ready to turn up again. So perhaps if the 2623 level, which supported the market a couple of days ago, fails to hold, then we may see then the price could hit the lower band of this bullish channel at 2583. The 20-day moving average will be also closely watched near the 2600 level. So additional declines from here may worsen market sentiment, likely activate a new bearish wave towards the 2517 and 2530 region, where the 50-day moving average, as well as a couple of dash trend lines over here coming from April 2024 and from February 2024 are all placed here. So another violation here and below the 2517 level may bring more weakness, probably towards the 2460 territory, where this almost flat resistance turned into support line is placed. Now, if gold manages to resume its upward movement, if it manages to break the short-term resistance trend line, which is more evident in the 4-hour chart, then we may see another test near the upper band of this bullish channel, currently seen at 2680. Above that, the 2700 psychological mark might attract special attention before all the eyes turns to this long-term resistance dash trend line coming from December 2023. That line is currently seen near 2825. Perhaps the 2800 psychological level could attract, will be closely watched if this scenario takes place. Now looking at pound dollar came under significant pressure today after reports suggested that the Bank of England is thinking of more aggressive rate cuts, so that sent the British pound lower and towards the 1.30 region, where this long-term ascending line from December 2023 is located. So if that line fails to hold, if the price closes below that line today, I expect more downward movements, probably towards the 1.34 to 1.30 region, where the price pivoted in mid-September. The 50-day moving average, as well as the support trend line coming from April 2024 are both placed here, as well as the 38.2% Fibonacci retracement of this up leg is also located. So failure to rebound here could confirm additional declines towards the 1.2863 and 1.29 region, where the 50% Fibonacci mark and this longer-term support trend line coming from the 2022 low is are all placed. Now, if we look at the technical indicators, well, we can see that the bias is negative. The RSI has slipped below its 50 neutral mark. The stochastic oscillator is also sloping downwards, and the MACD has slipped below its red signal line. So the bias is skewed to the downside. However, if the price manages to cross back above this thin descending line currently seen at 1.31 61.60, then we may see another test near the 50-day moving average and this broken support trend line over here at 1.3235. Higher than that, the price may head for the 1.3428 peak from September, and perhaps it may also attempt to reach this important resistance trend line from May 2024, currently seen at 1.3450, a break of which could mark a new higher high near 1.36. And finally, looking at the euro pound, this is a great performer today. It has already recouped all its losses from September 18th. It's currently testing its 50-day moving average, so there's a resistance here, and the 38.2% Fibonacci retracement of this downleg is also nearby at 0.8430. So I would like to see a break above that region before I target the 50% Fibonacci of 0.8466. Then above that, the 200-day moving average and the upper band of this bearish channel, which is extended from February 2023, is located. This area is between 0.85 and 0.8522, and this 61.8% Fibonacci mark is also within the region. So traders may pay special attention to this territory. Well, if you look at the market trend, the price hit a 2.5-year low near the lower band of this bearish channel, so that increases the odds for a bullish wave towards the upper band of this bearish formation. This is what happened back in April and also back in August, so it will be interesting to see whether the pair has started a new bullish wave towards the upper band of this bearish channel. If you look at the RSI, the stochastic oscillator here, well, there are some encouraging signs. The RSI is set to cross above 50. The stochastic oscillator is also sloping upwards, and it has yet to reach its 80 overbought level, so the risk is probably skewed to the upside following the break above this short-term resistance trend line coming from the start of August. Nevertheless, if the price fails to close above 0.8380 in the coming days, if it drops below that region, we may see, the price could again retest its 2.5-year low of 0.8316. The 0.83 level will be closely watched here before we move towards the 0.8250 barrier. So that's all I wanted to share with you guys. If you have any further questions, our analysis is uploaded on our page in xm.com. So if you have any questions, you can read our articles there. That's all for today. Thank you for watching, and see you next time.